Hey there, traders. What's going on? Jamie Saettele here. It is August 12th, 2015, here with the midweek strategy webinar with SB Trade Desk. So, holy hell, that's all I've got to say um, about what's going on here. So, we actually ended up being proven right as far as the the whole dollar turning over thing. It just kind of took a really long time. So that's a good example of how you can be right on your analysis and actually lose money because I've lost, have been trading just terribly over the last couple months. And in any case, the burst in volatility here, as we like to say, volatility clarifies. And the burst in volatility here, I think, probably is just what the doctor ordered as far as getting us back on track with our trading and our setups, at least in the swing, stuff. So, we've had, some interesting near-term stuff. Obviously, it's always near-term, stuff that you can play on, of course. Mike obviously does, all that stuff. I do some of it, but Mike does a ton of it. So in any case, why don't we start out by looking at the U.S. dollar? We talked about, this is the Kiwi. I'll get back to it in a second. You might have seen me kind of screwing around with some of the slope on there. I'm kind of between two things on there, but my two things that I really want to partake in as far as trading wise is concerned is Euro dollar and Kiwi dollar. They're the two big ones that have been, kind of bearing the brunt of all the strength against the buck here. But why don't we just move to the US dollar right now? So we've got, all right, here's the US dollar, right? So familiar chart to you, I'm sure. So we've finally broken down from that god-awful range that we've been in. Now, look, as written last night, same thing. I don't want to guarantee here that this is like the beginning of something else crazy on the downside for the dollar, because look, there's still support down here. Okay, but it is lower. So at least in the near term, is in like the next few days, I would expect to be putting on a short dollar position. Have a decent, confluence to look for that. I just tweeted this out, I think, like an hour or so ago, looking for support in the dollar. We are getting it, and that's actually a good sign as far as the bearish scenario is concerned, because this tells me that we actually are working with what the right structure, the right slope, if you will. So, the ideal spot here as far as a short position is going to be concerned for the dollar in general. Obviously, that goes for euro, pound, Aussie, and yen is what this index is. But I'd just be looking to play it more or less through probably euro, maybe pound, just because the risk is so small. I'll get to that in a minute. We'll get to the individual ones here in a minute. But so you've got the horizontal, okay, levels, right? More or less, you had all these lows back here between roughly, call it 11,980, 11,990, okay? A little less than 11,990, but like, 11,980 to 11,990. So you've got good horizontal stuff, but then you've also got two slope levels, or two slopes to pay attention to, I should say. The one that you really want to pay attention to is the flatter one, right? Which is always going to be the case. Okay, the longer one that takes up more time. It's got more data behind it, if you will, but it's nice when they do coincide. So what we've got here is basically where we were trading around this morning. Around 10 o'clock or so, you've got the former low 11,980. You've got the slope confluence here. It's actually at the beginning of Europe. So, look, I'm probably going to be sleeping at that time. All right. But here in New York, at least, I'd be sleeping. But, if you are awake during that time, then you'd probably want to pay attention to, around, this is 2:15 New York time. So what's that, like 7:15, 6:15 in England or something? And 7:15 in Germany, perhaps. But if you're up at that time, keep this index up and pay attention to these slopes as you get into this level. If the market trades in there early Europe, might just be kind of a correction that needs to be faded, basically, as far as buying euro is concerned and all that. So that's really where I'm at right now with the dollar index. All intents and purposes, this is a breakdown coming off of big resistance. Okay, and the level to look for the short, broad short dollar wise is going to be, into this 11,980 area. Simply break down, retest a former support area. Maybe 11,990, but it would be, I guess, preferable, if you will, if this median line held as resistance as far as being a bear is concerned. You can see how we traded around it this morning, actually. So came in, the market broke down, zoom back up. There's your little retest, right? Zoom down, retest, breakdown. So that's a very small degree one, of course. It only took 2 hours. But in the case of, excuse me, in the case of, the bigger setups concerned, you'd be looking for, the retest again, and it might be with the confluence. And this steep one, I know I said, pay attention more to the flatter ones, but the steep one here is actually got some pretty good touch points on it as well. Consolidation here last night and everything this morning during Europe. So I'd add some sliding parallels to this because there are really good touch points on it. If this is the tricky part when it comes for me as far as, giving you guys the swing trades based purely, based on this method, right? Because, if I'm trading it like myself, like this morning I came in, was trading Kiwi, and I'll show you how that, how I was doing that. But, if I'm, say, awake at this time and I see the market zoom into here, more than likely I'll look to buy euro at whatever that point is. Okay. But I could have a really tight stop on it. Like 10, 15 pips. The market will then pull off, trade lower, and take some off, and I'm home free, and I leave the trade on, and if it goes, it goes. But of course, there's always the option or the possibility that comes up here, pulls off, then turns around, does a 180, and zooms into the next resistance level, right? That's always a possibility. Okay, so if that happens, then it turns into a crap trade as far as the swing position is concerned. So, the focus for me is going to be on selling the dollar, but I'll have to do a little more digging as far as getting the specific levels are concerned. So why don't we start doing that right now with the euro. For one, how nice of a little tell, if you will, was gold here with that. It's the chart from yesterday, last night's update. So we had the pullback, okay, and this was the second Chinese fix, if you will, and it pulled back down into combination horizontal level, and the sliding parallels taken off on the upside. So this is gold's looking pretty bullish as far as the near term is concerned. We are breaking above this level, which is former resistance here. So if we continue higher from here, get up into the 1130s. Potentially, what's that, 1140s? Where's the prior low for Here you go. Oh, here it is. All right, so the 2014 November low is, yeah, it's 1134, and then you've got 1144. So 1134, 1144 just horizontally would be the level to watch. But then if you come off from there, you'd be looking for support more or less from the level that we just broke out from, okay, which is here, okay. So it's this line. So this line, which was resistance, you look for that to be support now. So you could see, if we rally higher and then pull off here, this is support. And there is potentially a slope to look at here. I was kind of fooling around with it before, but it's this one. And again, why am I looking so much at gold? Because the environment that we're in, obviously, and the way the dollar is moving here, if you can get a good grasp on where gold is really likely to break out, accelerate, pull back from, blah blah blah, then you might have a pretty good, a little more confidence on pulling the trigger on dollar stuff too. Okay, so again, pretty good as far as touch points here on gold is concerned, right? I'd pay special attention to this sliding parallel here, okay, because it was resistance before. And that's really about it as far as gold's concerned for now. So gold horizontal levels 1130s, 1134, 1144, and the old resistance level being new support. Basically on this line. So that's where we are with gold at this point. May have really turned the corner. And don't forget about the article that was written as and I guess it was towards the end of July about the gold and non-confirmation with the dollar and what happened back in the 90s. Okay, I believe that was it 1998? Not sure. But we could get something like that, okay, as far as a massive decline in the dollar throughout August. Okay, so let's move to the dollar, to the euro, and to the dollar pairs and FX that we're going to be trading. All right. So first, the euro. Okay, we've actually got an interesting spot. We've come into resistance up here, okay? In fact, I pointed out on Twitter the whole thing about coming into resistance of basically, taking out the high at 1216 and then, looking for it to pull back. It's doing that right now, but another reason why was because of this. Okay, this was the old levels that we were trading off of, actually, last year. So we had a whole bunch of trades off these levels, and this could end up providing some resistance. Okay, it's 12:30 today, and it's like 12:20 tomorrow. So that you've got 6 up days in a row. Not sure if that's going to be significant or not, but let's check. Well, we haven't had too many 6 up days in a row, right? 6 up days in a row. Had that actually once here in May. We were actually long for that one, I think. And, we could get a pullback here. But again, we'll be looking to buy that. And as far as where, we'll go back to the short-term stuff. For me, it's pretty clear at this point. This slope is what we're going to watch, and you've got the former resistance level, okay, from the sliding parallel, and it intersects tomorrow very near 1113, which is the high from July 31st. Okay, so that's what we're always looking for, right? We're always looking for the confluence of confluence between, I should say, horizontal and slope, really. So if we go in the short term, and I'm going to draw it. I'm going to make a habit of doing this, I think, during the webinars, of drawing it so that you can see me draw it. And that way you can draw it as well on your chart. Okay, so we'll start with short term, as in last few days. Okay, so here's this one. All right, weekly open price here, right? Came into that level. This is a good slope, and it was really good support, obviously, okay, on this occasion. If you draw the sliding parallels, it was interesting support here as well. In fact, I think this yesterday was tweeting out charts with this, talking about coming into support. We had 1087 as daily reversal resistance at the time, and then we were coming into support. I think I said 1020. Low ended up being 1010. It was right about this time yesterday, actually, during the U.S. session. So what you want to watch for is former resistance becoming support, okay? And in this case, take these lines. I would make these thin lines because they only have one touch point, okay? So, the bold line obviously sticks out more, and it's supposed to means it's more important, basically. All right, so we have the short-term stuff here, all right? We know that we have former resistance here. We want to look for it to act as support. Can also draw across, our recent highs that we just broke above, because again, former support often becomes resistance, and former resistance often becomes support there as well. All right, so we've already got something interesting right now to work with, okay? Basically, we've got, this is during Asia tonight, we've got basically 11:30 or so. We've got 11:10, 11:13 during Europe is an intersection. We've got tomorrow during the end of the day, you've got something down there. So the one I probably pay attention to the most here would be this one, just because it's during European hours, right? So 11:13, and that's actually the same level that we just looked at on the daily anyway. So that's cool. All right, I'll go to the next one. We're going to draw this one. Now, it's tempting, or you would probably naturally just draw this, right? Because that's the low. And that, maybe that's the right one. I don't know. For me, the one that seems to have a little more influence on price is actually this one over here to this low, because remember, I always say that you want to see how the market or find the slope that describes price action, right? And in this case, this one seems to describe price action better because the parallels have some more touch points on it. So like, for instance, this one is really good, okay? This one goes off this high, and you can see how that was support. Okay, so that was support here, that was support here. All right. And that one will be a bold line because it's got multiple touch points. Now, if we made it all the way back down there, that would be a pretty deep correction, okay? Mark's talking about starting it over here, right? So you could go with this one here. Yeah, not say absolutely. Yeah, you can absolutely do that. The reason I wanted to go with this one is because this is the one that we're going to have on the daily anyway. Um, we might during this webinar we might actually get support if we things are pretty volatile. So we could come all the way down here and end up getting you know a dip and a rip from 1150 or so. Um, in any case, going to continue on with this one here. This one, okay, off of these lows, support here. You had a very strong move down through this one here. Okay, it was resistance here, it was resistance here. So this is one to also watch. All right. And finally, I'm going to draw this one, which is especially useful because it's very precise on its touch point here and here. And that was, again, yesterday's U.S. session high at 1087. Okay, so as we go into tomorrow, you basically have a whole window of support to look for from roughly 111.30 to 111.10, right? Um, you'd be expecting a bounce from that point. Okay. Um, now, as far as the upside's concerned, for that, I'd want to look at the weekly chart, and I think I actually included this chart yesterday. So don't forget that we're coming off of huge support, right? Obviously, 2000, 2001 line. Interesting how the lows for the last several months have been on that exact same level, actually. Um, so here we are now, okay, and I'd be looking at resistance up here, and basically 113.85, 114, which, if I'm not mistaken, is also the 200-day average. So you're going to have a heck of a battle, one would think, up at this region. 113.85 to 114, especially if we reach it in the next 2 weeks. Okay, so the trade plan, as far as I'm concerned at this point, heading into, and this is the one right here that I was highlighting just now, as far as heading into tomorrow, into Thursday, would be to buy the euro on a dip into basically 11.15. Okay, we have 11.13 is the level here in the 731 high, but 11.15 and target probably 12.77. Okay, which is this high up here. You've also got a confluence up here, and that's the median line that comes all the way back. That was the breakdown of median line with the gap and everything. Okay, and it's also the same slope as the trend line from this high. Okay, so you'd be targeting 1277, excuse me, and I'd probably take off the whole thing there, to be honest, because that's a big spot. And if you're real nimble, you might actually look at shorting up there. Although I'd probably rather do it on a Friday than a Thursday, but in any case, 1277 is a big spot, and so 1115 looking to buy it. 1277 resistance, so look to get out there. Might want to hold some for 1385, 1400, but again, would be expecting a pullback from up here too. Okay, so 6 days up in a row, pullback, maybe get a last thrust into here, and then you get a bigger pullback. All right. Now the stop placement on this is obviously going to be tricky because you want to give yourself a chance, but you don't want to take a giant stop either. So this is a 15-minute chart now. Okay, same slope that we looked at before, and sorry, same slope, but also So here we go. Also, what's interesting is that the level we're looking at, the 1115 area, 1113, 1115, is also the former fourth wave down here, right? So the rally from this morning, from what's it, about 5 a.m. New York time, so from kind of a late European little pivot low there, would be constitute a very small fifth wave, right? So this is a fifth wave. So you'd be expecting from an Elliott standpoint anyway, you would actually be looking for support around this region. So it's all lining up as a pretty good level to get long. Now, look, the long would actually be valid as long as you're probably above, all the way down here, which is 1020, but I'm not going to be I'm not going to put a stop that large. Okay, so I'd put a stop here, 1065, right? So if it's triggered, you're talking about, what's that, 50 pips, 1065, 1115, and looking for 1115, where we're looking for 1275 or so, right? So looking for 160, so a little better than 3 to 1, and that's what we're looking at there. Okay. All a matter of timing, right? I actually was sitting there and I had it written down in order to short. I wanted to short if we reached it during the latter part of Europe. I was looking to short 112.30 in order for that pullback, and then take that to 11:30 or 11:15, and then get long from there, right? Mark, he just asked the question. Yeah, so that's the thing. Like, I'm looking to short. I think it's going down there, but I don't know if we're going to make another probe of the high today or not. So that's your question. Actually, is still that's a very good question, and that's something I'd be willing to do if the market from right now. I mean, it'd be a weird time to do it, but hey, these are weird times in the marketplace right now, obviously. So if the market takes off from here and rallies 50 pips into the end of the day or whatever, you're still looking at this spot. This is 1230 or so, okay, right here, this long-term line, which, by the way, is still very much in play and valid, right? So I'd be looking to trade 112.20, 112.30 on the short side, and then take that down to, again, 11.15 or so, 11.30, and then look to flip to the long side. We're not in any sort of confirmed broad move higher, right? The move out of here is great, okay? But, this isn't a huge breakout to the downside or the upside or whatever. So, it's okay to trade both sides here, and, as far as I'm concerned. All right. The big move up to, if we get up 1385, 1400, still could be to the downside, in fact. In fact, that confluence comes in towards the end of the month. This is the long-term slope line all the way over here. All right, so spent a lot of time on the euro, but for good reason. So there you have it. We're looking at 11.15 or so entry, 10.65 on the stop, and then take that up to 12.77. Right? Yeah, at this rate, we could see a 111.15, and yeah, absolutely, we could. And that wouldn't be a bad gig either, because if we do, a lot of times during these, kind of these more volatile periods, it's not a bad bet to actually fade the late U.S. move. So if we fade down into 111.30, that's your counter trend move, late U.S. session, right? Go with the active hours move and fade the kind of the chop on the downside during the quiet hours. All right, let's take a look at pound. Do the same thing here as far as obviously drawing along with you. Okay, so cable. first of all, the analysis that's been presented recently as far as the raised floor being a bullish sign in pound still very much remains true. Okay, so we could see a hell of a surprise rally a lot higher than anyone expects. You know, pound, look, we just traded around the year open for how many weeks? Basically a month. So this thing's coiled, that's for damn sure, and it's pulled back sharply. And I bet you a lot of people, including myself for a little bit, was kind of like, huh, okay, maybe this is actually going to break down. But as is often the case in, you know, a really tight range, the first, you know, break, if you will, is the wrong one. And we actually saw that with the pound here, the break out of this tight range being the wrong one. We saw it with the ICE dollar index too. Referenced this last in last night's post, but the break, it wasn't really a break, but the move above the high on Friday to that new high was not confirmed by the euro, right? So that was, you know, the nice little tell, if you will, I guess. So pound. Okay, so pound, here's the trend line, broke that. Here's the median line, we're back above that. That level, basically 56, you know, 05, 56.10. That's your support now, okay? And your resistance at this point actually is this line from the 2015 high to the June 2000, June 2000, June 2015 high. So the high from June. So the last 2 years highs, one just a few months ago. That's going to be, you know, your next level to potentially contend with resistance, and that's about 57.20. Yeah, 57.90 up here. Wondering if this could be something to watch. Maybe. I want to take you to the short-term chart, though. So here's pound, right? The first one that I was looking at, of course, is this one. And pound it does have a very bullish look to it in the sense that you've got this three-wave drop. You know, I don't know if this median line comes into play again or not, but, you know, we're kind of pressing the issue on resistance here. In fact, this is itself an observation that you probably want to make note of. So you see how precise that this resistance was here? Okay. Basically, what was that? That was Europe this morning, I guess. And no, sorry, that was yesterday. It's the 11th, and then that was the 10th. Now here we are, you know, this is resistance, but we're trying to press the issue on it, right? Pressing above it. So that's a pretty good, that's a bullish sign, not like for right now, right? Because this is resistance, but it tells you that the market's firm and, you know, it's trying to break out, right? So, you know, you can do the same thing with horizontal levels too, but with slope it's better because it's upsloping, so it tells you it's that much stronger. So as far as where to look for support in pound, we talked about 156 basically, right? Let's add this one now. I actually haven't looked at pound a whole lot recently, so I'm not, oh, this happens to be the same slope, and I love when that happens. Look at that, that's great. All right, so this is the same slope. Totally different pivots, but the same exact slope. So these are the levels we'll probably be trading on at this point. So I'd be looking for support there, okay? Former resistance, same exact slope as the broad one that we're looking at, which is great. And guess what? It's going to be basically 156 as well. So you've got two, you know, totally different slopes, if you will, telling you to look at 156 as support now. And I'll just add this too. Oh, look at that. That's nice. Okay, so here we have it. Former resistance, upsloping resistance, here and here. This is your sweet spot. It's actually during Asia tonight. Usually I'd say, I don't really want to play this because it's during Asia, but who am I kidding? Right now, Asia is like, they're the whole freaking, that's what's going on, right? I mean, China's coming out and I guess panicking because they don't know what the hell they're doing. And, no one knows. Uncertainty breeds volatility, which, for us is fine, but we'll be watching tonight. I watched for 156, basically 156.04 as support in pound. And this is one of those where you could probably put a really tight stop on it, actually. So if you're looking at 156.05 as an entry here, and again, this is going to be tonight. Like I'm doing this webinar right now. It's, this is Confluence is what, 5, 6 hours, 7 hours from now. So I'd be looking for support there, but at the same time, if the market starts going haywire between now and then, this is not going to be valid. But anyway, yes, as Mark would say, as I would say, 156 looks tasty. It looks awesome, right? So 156 looking nice. So now we've got two levels now with two of our components of the US dollar. The euro 111.15, pound 156. Hell, we might see those by the end of the webinar. Who knows? All right, let's look at Aussie now. All right, so Aussie dollar. Go to the daily chart. Aussie and I am not too friendly at the moment. So this is the chart I think I presented last night to you guys, right? Yeah. So look, here it was. We were looking at this. The idea was definitely not a bad one as far as looking for Asia and when they were coming out with the fix last night to look for the low to buy. Unfortunately, the low took out the bigger low, which for me, as far as sending out a trade alert, kind of negated, what it was that, I wanted to do. So in that case, I know that some of you probably jumped in anyway, and for that, I commend your bravery. But the idea of looking for panic lows, all right, still, still there. Now, this setup on the long side, not nearly as great, in my opinion, as Kiwi, okay? And we'll get to Kiwi in a second. But from a horizontal price level perspective, 73.07 is still really big, okay? Again, it's the month open price. It is also a high volume level, okay, as far as 73 is concerned. 73.07 was the prior, or the weekly close as well. It was also the 7,300 was, of course, the close from August 3rd, which was the prior low and a reversal day. And then yesterday was a huge volume day, and that was, let's see what the volume looks like right now, actually. Today's even bigger, okay? So yesterday was a huge volume day for the Aussie, as you can see, okay? Yesterday was one of the biggest days since, what, back here, April 29th? Okay, so today's going to be bigger. The biggest day, depending on what happens at the end of the day, it's going to be the second or third biggest day of the year for volume for Aussie. Okay. So in any case, I look for those closes as support and resistance. And this one actually from the 4th was resistance today. We ended right at it so far. And yesterday's close, very near 73.07 on spot. These are futures, so the price is going to be a little different, but we'll be watching for that. So I'll give you 73.07 as potential for support. And then let's look at the short term. I haven't done a whole lot with Aussie here in the near term picture. Obviously, we've got 15-minute, 5-minute, 1, 2, 3, 4, 5. So I can tell you right now, this is already one where there's going to be, so that might be the one to watch right now. Why? Because of obviously we stopped at the median line for one. Got pretty good stuff here on the sliding parallels, so that would be interesting, to play along with, right? So this is a pretty good description, or a pretty good explanation or example of how finding slope, how it describes price, okay? Oops, I did the wrong one. Hold on. There we go. All right. Okay, so 73.07. Is that about the halfway mark? Probably is. Just about. So that's the halfway point between, the median line and the lower parallel. It's one level to look for as far as support's concerned. For Aussie. Now, again, with Aussie, I'm more than happy to point these levels out. Actually, it's a pretty good looking confluence as far as 73 is concerned. And, when it joins up with price, 72 with the retracement looks like. 7,300 is exactly 50% as well. Sandeep's got a good question. I'll get to that in a sec. So. I'll be looking at 73.07 for support in Aussie. Same level we were looking for forever, but now we might actually have a setup that's going to last. Yeah, Mark saying probably very risky again with China setting rates. Yeah, I mean, look, the thing is have your levels mapped out, and if it trades into there, like we have now, we've got these huge reversals, and this is what crazy market lows can look like. So is it going to take off right from here? No, probably not. You probably got all kinds of chop to endure at this point, but I think we're probably nearing the end of it at this point, given the structure on the US dollar, everyone getting caught off guard with the the yuan, and many people thinking that's going to strengthen the dollar. We didn't fall for it. We were looking for the resolution to the downside in the dollar, which so far has happened. Okay, I don't know if it's going to last, but so far it's happened. The setup's there, and that's all we can ask for. So we'll be watching for support in Aussie, Kiwi, Euro, whatever, and that's all I can do is point out that 73.07 looks like great spot for Aussie dollar. Okay, so that's where we'll be looking for Aussie. Now, the one I like a lot better as far as the setup's concerned is going to be Kiwi. And Sandeep, I'm not forgetting about your question. Your question is curious about the non-dollar crosses showing more potential. They look more clean. I'll get to that in a second. I just really want to get to this, the stuff here about the dollar crosses, because we've been following this forever, this possibility, and now I don't want to screw it up, basically. Okay, so perfect? No, of course not. But, more or less, we are finding, support. You got to remember everything on this wick down here that lasted for like what, like 10 minutes. So, the idea of this upper parallel form of resistance providing support, I think that's the right way to think at this point. Um, as far as Kiwi's concerned, we've seen how Kiwis reverse like this before, right? I mean, do you remember back here? Okay. That was on the 3rd of February. Very drastic reversal. Took out, a whole bunch of prior days range and all that. Obviously doing the same thing here. With Kiwi, the short-term picture slope-wise does look much better than that of the Aussie, in my opinion. All right, so there's two things to watch. Well, before the webinar, if you saw me kind of drawing and whatnot with the Kiwi, I was wondering if we should still follow this one or not. Okay, rather than put the final pivot over here. And this is the one I'm sticking with for now, just because we've responded to it up here, right? We've responded to that to this afternoon. Took out 66.36, 66.40. Okay, getting a pullback. We actually took it out this morning. I sent out a tweet. We're going to look for 66.40 resistance. Made 66.40 high, pulled back like 60 pips, took off on the upside. So where to watch for support now? Well, this is going to be one. It's basically a 66. Okay. That's probably going to be one too. This one was support this morning, right here. Okay. So for Kiwi, we'll be watching for basically support from roughly, near 66 here. Okay. Maybe slightly lower, 65.90 or so. This is obviously shorter term trading wise. When I look at the daily chart, and it really sticks out very cleanly that the entry for a swing position is probably something like this. Okay. You can see the sliding parallel touches very cleanly the low here on the 5th and the low yesterday on the 11th. So that's probably the line that you want to end up buying on. And yeah, it's basically 65, 50 to 65, 65 or so. All right. And I want to do a retracement of just today's candle. And holy smokes, it ends up as levels that we've got here anyway, which is 65.34, 65.54. So that's probably your best bet from a swing position standpoint. Obviously where we are right now, 66.20, that's, 70 pips lower, just the top of that range. So, nimble range trading in this environment, up here, short up here into this level, not a bad idea. Again, positioning for the swing, I think it's higher. Just look at the weekly chart. I mean, tell me that this isn't down here. Just look at that thing. Pure hell. Okay. But you know what? Remember this line? Red line? Support, breakdown. Okay, that's going to be resistance again. And the way that this market's trading, I think we could probably trade up there in a matter of weeks, and it's like 69.85 up there. So, if we get 65.50, 65.65 or something like that, and get in there with, a stop under maybe 65, we're talking about targeting a 400 pip gain potentially on Kiwi. Okay, so Kiwi and Euro are probably two favorites as far as trading wise, given the volatility, given the slope levels for them and everything else. Kiwi love it just because of the confluence that we have, right? You've got the old sliding parallel here, which was resistance. Okay, watch for it to provide support now. You've got the new bullish slope. We hit the median line, meaning that, you know what, maybe we're actually working with the right thing now. Sliding parallel touches 2 days lows very cleanly. Watch for support now from that level. Okay, so that's what we'll be doing. See what the US dollar is doing as I'm speaking. I know that we've had a little dollar rally. Here we go. All right, so we are rebounding. Again, keep these slopes front and center for you. Okay. All right, so let's get to some of the, I almost forgot to show you the dollar yen. So dollar yen actually came into, remember that slope from the post from Thursday before NFPs? We've come into that month open price 123.88, bouncing. Here we go. Not really wanting anything to do with yen right now at this point. Let it settle down today and see what happens. Okay, so Sandeep, here we go. I think one reason, actually, I don't think I know. I know one reason why, the trading and the swing's been so crappy for, I just haven't been good lately. I'm just watching too many things, to be quite honest. So like when there's not, when the dollar's mired in that just absurd correction, I was like, well, look at the crosses and give them some stuff on the crosses. Well, that ended up being pretty damn messy too, right? So as it is now, yes, the best looking cross, in my opinion, looks like it's going to be pound Kiwi on the downside. Talked about it yesterday. The slope pretty clean. Pound Kiwi actually did not make a new high, but there's also risk here that this thing actually ends up trading in a triangle or something and actually makes another high. Okay, so it's for the levels. Yeah, follow the short-term levels, especially with Mike. He lays out the levels really. They're very clean. But as far as being, I'd like to be a little more, I guess, in sync with the markets, and that's what someone just said, actually. Mark just said that. I'd like to be a little more in sync and follow the dollar crosses and kind of, it's what when I was trading well earlier in the year, that's what I was doing, right? Every once in a while there'll be a cross trade that I'll put on, okay, if it's like real clean, and Euro Yen could be coming into that as well, by the way. Euro Yen, for example. Remember this one, right? If you're wondering where this comes from, this is the same chart that's on the so this is the dominant trend line, or the dominant slope, I would call it, in Euro Yen. Okay, it's down, going back, what? Going back to what high is that? It's that 2013 December. Okay, but remember the gap right here. So we extend from that gap, which incidentally was actually the neckline from the head and shoulders pattern that we had here, and we traded that earlier this year. Anyway, so that was resistance, and so we're coming up on it again. Okay, so it's like mid 139s this week. Okay, so you might want to pay attention to Euro Yen up here, and this goes to the whole heart of. So here's the equity market, stick, save, and a beauty again as we come off the median line, right? and 30 handles off the low. So here we have, if we break this, if this ends up breaking for real, right, then we get the so-called risk aversion that everyone's used to, which is the whole yen cross is falling off a cliff. If that happens, well, if that's going to happen, then euro yen's going to turn around right here. Okay, so I'd watch very closely euro yen here, right? And it's a possibility. I'd watch for euro yen up here, mid 139s. All right. So with the crosses, that Sandeep, I know you're pound Kiwi guy. Look, every single Europe commodity cross is extended to the point that we really haven't seen, but maybe like once ever. So, you know, the idea is there. I'd still follow this slope, by the way. The idea is there. This is your resistance still, 238.10. Okay. And it could be a heck of a trade, but you know, myself, I'm probably going to be end up looking at some of the dollar crosses a little, you know, just try to get a little more in sync. All right, just because the dollar's starting to move, and you know, we've come out of a really crappy range, and you know, it's not a time to be screwing around with too many non-dollar things at this point, in my opinion. Okay, but you know, I will say that the setup in this pound Kiwi pair does certainly, you know, I think speak to the bullishness in Kiwi itself, right? And again, that's, you know, allowing for a pullback, and maybe a pretty sharp one at that. Okay, remember on the swing, we're talking about maybe this thing coming all the way down into 65.50. In fact, that would be, you can see it over here. It'd be, okay. So 65.50 might be the spot, maybe even 65.35. Widen it out a little bit. Let's see what the, you want to see a 5-minute? This is I was trading with this morning. Okay, so here we have just traded outside of this new fork, if you will. Kiwi dollar, 5-minute chart. Way too early to say if that's something to follow or not, but probably not. Okay. But you can see this is really the first crack in the day's trend. So this was the panic low. Thanks, China. Here was the rally from that point, and we actually just now have traded out of it, like within the last 10 minutes, right? So this is your best indication that I actually probably headed down for, again, a test lower. We've got it 66, 65, 30, 50 or so. So, you know, what was that, 1105? Let's see where the high hourly close is. Okay, 63.30. Yeah, nothing really to work with there. But I would be looking for resistance up near 66.33, especially if it's over here. This is a 5-minute chart, okay? So by the time you watch this, if you're watching the archive, this might not be actually worth listening to, this part. But former support, okay, the median line was really nice actually. If we can kind of come off and meander up to the top side towards the end of the day, you might have a sell at the very end of the day for that counter trend trade down into 65, 30, 50. All right. Okay, so there were a few questions. I'm going to take a look at them real quickly. I had a question about dollar CAD. Absolutely. Had a question about Aussie Kiwi and Euro Pound. Okay, so dollar CAD. So someone asked me yesterday here at the office, someone said, I got this really sweet looking pitchfork on dollar CAD. I said, okay, show it to me. So they showed it to me. This was the one they showed me. I said, that is interesting. I said, but do you know what this up here tells you? Because they bought it down here. They were like real bullish. And I said, it's cool, but the problem here is that you've got space up here, right? Space between the median line and the price high. I go, that tells you that the support is probably going to break. Well, sure enough, we actually broke it today. So I also explained that it's better to look at flatter ones, right? Flatter ones are better because by definition, they're going to last longer, right? Because markets just don't have a tendency to move like that sharp for that long, right? When they're moving that sharply, it'll be nice for a little while, but they're gonna get invalidated eventually. This will get invalidated too eventually, but this has some pretty good stuff to work with still. So dollar CAD, Kelly, to give you dollar CAD, you've got really, really wonderful spot right here. And this is indicative of the dollar at large, right? Just like we looked at the dollar, here we go, dollar index bouncing, okay? So this is a big support confluence right here, okay? Two median lines, one down, one up, okay? More important one's up. Eventually, this is big support probably on this line, okay? I'll go to a short-term chart though, try to get a little more granular with this thing. All right, so for dollar CAD, again, treating this as kind of the beginning of a broader correction from the top up here. I'm going to look for, what was that? I'd say that's probably the right one to look at as far as a sliding parallel is concerned. So you're going to want to watch for, this is a range obviously, but watch for resistance on this one right here. Okay, former support twice. And it's more or less in line with the horizontal, what's been important from a horizontal perspective. You can see basically 130.50, right? all this stuff at 130.50. Kind of resistance up here last week. It's NFPs, I believe, right here. Yeah. And then, no, so that wasn't NFPs. NFP was over here. This was, what was this? Oh, this was the end of July, and we had that crazy down move on a Friday, and then we went higher. So first thing, 130.50. Watch there for resistance. I still, how much I like and more objective, of course, with the month open price and everything. So I'd still look at 130.85. I don't think I'm going to have anything really there. You could possibly draw something like this at this point. Iffy. You might want to follow that. But, we have established, a very strong uptrend, obviously, and we're bouncing from the median line from that support right now. But given the broader picture with the dollar coming off of resistance, breaking important supports, I'm more inclined to sell this bounce and probably sell it up near 130.85. Okay, maybe slightly higher. What's this high up here? 131. Okay, confluence for here would come in, not wouldn't be for maybe till next week, but anyway, it's the same across the board, right? The good thing about slope, Kelly, and this is is that you try to, at least the way I do it, and it's far from foolproof. I'm sure that you guys get that by now. But look, when you're hot, and when you're cold, you're really cold, and maybe just back off for a little bit. But the good thing about it is that you're identifying trend and you're trying to trade with it. Pretty simple, right? So in this case, we know how the market has traded into really big levels, is really extended on the upside, blah, 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 showing signs of reversing, maybe a topping pattern, but how are we going to trade that? We're just going to go short and pray? No, right? We're going to look to trade on the downsloping lines, as close to those lines as we can in order to get the best reward to risk ratio possible, right? So at this point, stops would have to be above here, right? 31.56. If we can get a move up back into 30.85 or 31, right? And you're talking about a pretty decent stop for what could be a traveling, or a move down into this lower parallel at some point over the next, week or two or whatever. And, that would probably get you, could get you down near the 27s, but most certainly 28s. Okay. So that's where I think we are with the dollar and kind of in general, really across the board, right? Is that we're getting a bounce here. This bounce, I think the right thing to do is to sell it. Not right now, but once we get to resistance. Okay. And the first spot to look for it on this dollar index is 11,980. Okay. So, yeah. That's where we are with the buck. Euro pound. There was a question on euro pound and then euro kiwi and then, Aussie Kiwi, and then I'm gonna have to wrap it up. So euro pound finally turning the corner, right? We've had this proposed ending diagonal. So I think it's pretty safe to say that we can get rid of this at this point. And this could turn out to be a pretty good looking slope to follow right here, okay? We've actually traded right into the median line. So we could get a pullback here. There's Mike Miamiing me. Yeah, so we could get a pullback here. We're at this median line. So would follow this one. This is euro pound. Could end up being something that, follows for a while. You've got this is a good looking slope to follow right here. So, all right, you've got the ideal spot to get a long position on this thing. You see the median line, okay? Burst it through, burst it through, burst it through. Finally, we might have said goodbye to this thing, okay? And where I would look at buying this would be either down here near 70.75 or a little lower near 70.50. 70.50, this confluence isn't until next week, so we could chop down lower and get there. If we do, it'd be a great buy. This one actually happens on Friday, 70.75. So euro pound looking like it's turned the corner like a lot of, like I guess euro dollar has. Oh, you got that too. So you got this. This is like a really ugly inverse head and shoulders, but it's still valid. It has broken down, retest the neckline. We get that, crosses both these levels. This is such a good looking chart. I'm going to put it in the swing update later. Okay, so there's euro pound. All right, now I'm going to do Aussie Kiwi. Okay, so Aussie Kiwi daily chart. So we have, first of all, we do have these slope lines, if you will. So we're kind of in the middle of nowhere because support's down here, okay, down here. Resistance really is up here. Let's see if we get anything here. Well, that looks like the right one to follow, doesn't it? So you could see a little bounce here, median line right here, 1080. You know, as far as trading this, I probably wouldn't do anything unless it was to look to maybe sell up here. So that would be up near 1270. Okay. Now this is going to be a function probably more of Kiwi because it's been a little more volatile recently. So if you get a deeper Kiwi drop, which was what we're looking for anyway, remember that? We get a Kiwi drop down to 65.30, 65.50, and you could get resistance up here in Aussie Kiwi near 1270. Okay. But as far as, you know, a big move is concerned, we're trapped here between basically this slope and this slope. All right, so it's certainly a range. And, you know, nothing wrong with playing a range if that's your deal. I think that Aussie Kiwi's probably basing for a much larger move higher, but that can last for a while, obviously. All right, okay, so I'm going to wrap it up. I really got to run. Went a little overboard today, but that's okay. Had a lot to talk about. And again, pay attention to the dollar here. I'll be watching this closely for the rest of the week, especially tonight as we get up into resistance, or, you know, thinking this is probably going to be resistance. Basically, again, 11,980, 11,987. The mark, man, quite all right, brother. You're awesome. We love it. So 11.90, 11.97, and again, that probably puts the euro down near 11.15. So looking for 11.15 for euro to buy. Kiwi looking for 66.30.50. Pound maybe 156, but it's not that far away at this point. Aussie more of a mess than anything, but would really still pay attention to 73.07, the month open price. And then don't forget about euro yen, right? Talk about euro yen. That mid 139s. It's a really nice looking slope, and you know, it's had some really precise touch points and caught some really big turns. So I would pay attention to euro yen over the next couple of days, really the rest of this week, in the mid 139. So in an ideal world, we end up getting long euro 11.15. That thing rockets 12.77, and then we go short euro yen up there, and then the market breaks, and that's my dream. Okay, all right. So that's it. Again, thanks a lot, everyone, and can't wait to talk next week. Have a great rest of your week, okay? And be out later with the report. All right, take care, bye. So hey, I just saw you. What's up? What you got a quick question? I was gonna end it, but I stopped ending it so I could answer your question. That's okay. That's quite all right. Okay, so we went through pound. I went through the pound dollar earlier. Okay, so I'm gonna put this up. This will be archived. So if you can't make the session like today, then we'll be looking. I'll show you, this real quickly. But basically, we'll be looking for support not that far down from here. 156 is a big spot, very short term. Um, we've also got, you can see here, short term, 156. Okay, if that fails, then you're at risk for obviously a much deeper correction, probably down towards 155, 45 or so, and potentially even 154.90 because that's where we open the week. It's also what we call daily reversal support around here, which is the low for the move on the day that the low is made. Okay, so at this point we are looking at selling dollars on bounces into resistance. So that would be pound. First place would be 156. If that fails, then it's kind of wait and see where the market wants to trade to. But two levels I'd give you would be 55.50 and 54.90, with obviously 54.90 being the ideal scenario. Okay, but 56 is a big spot because that was the trend line we just broke. Okay, all right. Hey, no problem, man. No problem. I'm gonna archive this, so this whole thing will be up, and you can watch the whole thing anyway. All right. So again, thank you again. If you're still here, take care. All right. Bye.